Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv, where we bring you some updates, some new stuff, learning, educational content, new crypto reviews, and try and help you navigate the crypto space, especially with everything else going on and so many crypto experts and influencers out there, whether it's on Twitter or here on YouTube or even on Patreon. Before I forget as well, please note that we've got a Patreon channel now where at the moment subscriptions are all free. You can become a member free of charge, you don't pay anything, and there is content that is geared towards that free membership. So you may want to consider that if you haven't done so yet, because there we are sharing some proper alpha. There is a project we shared there, still very tiny, but it's doing some wonders. So you may want to go back there and check it out. If you are subscribed as a free member, you won't just go there to see the free video. It's actually visible only to those who are subscribed, and it's all free. Be a subscribed member. Anyway guys, so what I'm going to bring you today is not financial advice, it's just my own opinions on what I consider top investing strategies in both cryptocurrency markets and financial markets. So it may seem generic, but it's quite specific, and these are the top 5 strategies I've learned over the years I've been within the investing space. I'm not a qualified investor, by the way. I'm just a retail investor like most of you, but I do take a slightly more professional take on things, and when I run things, I run them like it's a business. So that's what it's supposed to be, but it's not, but it is. Anyway, so today we are going to be covering top investing strategies in financial and cryptocurrency markets. Guys, please do your own research, and some of the stuff that I'll be sharing with you, some of it is public knowledge, so you can access it at your own time. All I did here is just trying to pull it all together to help make it make sense. It might not make sense to you. So the top investing strategies that I'm going to be sharing with you guys that you can use to navigate the later phases of the crypto markets as we enter the final phases of the current bull cycle. It's up to you how you want to use it, but some of it might actually be ideal for those with a long-term time horizon. So I'll give you, the format will be, I'll suggest a top investing strategy. I'll provide a justification. Where possible, I'll identify like a case study where I actually share with you what someone has done before, okay? And where appropriate, I might just drop in what I'll be doing to match that strategy for me within the crypto space. So the first one is value investing. I think you've heard that from so many so-called financial experts. I'm not a financial expert. I'm just some dude on the internet. So value investing involves picking stocks or assets that appear to be trading for less than their intrinsic or book value. How do you know that? If you watch Sage5.tv, you'll know some of the cryptocurrencies we highlight in our reviews, some of them are good value and we even state so. Or the updates we do following our reviews, our DOO, our risky evaluation reviews will suggest so. But that is just to tell you what we are doing on this channel. What you do is up to you. You must be doing your own research, or you should be doing your own research, by the way. So value investors actively seek stocks they believe the market is undervalued. They buy these stocks and hold them for long periods, hoping to make a profit as the market corrects the price. There is a crypto project that we highlighted to our Patreon members, free Patreon members. To me, that is still a value investment crypto. If you want to know what that is, go join our Patreon channel and you can watch that video. And you may also be able to see some of the text posts that we put on our Patreon channel. Anyway, one of the most popular examples of value investing comes from none other than, Warren Buffett and Coca-Cola. I think this is a widely used example as well. And his strategy was value investing, and the outcome was significant long-term gains as Coca-Cola's market value increased. So I think he had like a 20 or 30-year investment horizon in Coca-Cola. So it was quite long, maybe 40 as well. So that shows patience pays. So you can almost relate this to the early investors in Bitcoin. It's not 20 years yet, but they've been in the market for long. And most of them, if they haven't sold, they are reaping the benefit. And the case study for Warren Buffett is perhaps the most famous case study of value investing, where Warren Buffett has built a fortune by investing in undervalued companies. For instance, his investment in Coca-Cola during the 1980s, when the company was undervalued, resulted in substantial gains as Coca-Cola's market value increased over time. There was a time when there was nothing other than Coca-Cola or any soft drink. You say soft drink, it represented Coca-Cola. That's it. Whatever name, it was Coca-Cola. And to be fair, they managed to get most of us addicted on their formula. So that's value investing. Bitcoin is an example. If you see other projects like some popular layer ones, if you think investing now for say a 5 to 10 year time period, if you want to call that long term, that's up to you. In crypto, I think that is actually long term. 5 to 10 years, that's long term. Okay, that's my take anyway. So that's value investing for you. The next strategy that I picked is growth investing. Now, with growth investing, we are focusing on capital appreciation. Growth investors invest in companies, typically new companies, expected to grow at an above average rate compared to other companies. These companies often do not pay dividends but reinvest earnings to fuel growth. So for example, in crypto it's quite different because most cryptos will actually launch and straight after that you know whether they're staking or not. That's kind of a dividend, isn't it? They start paying you if it's staking, they start paying you for staking your tokens, paying you like a dividend or a return on it. So in crypto, it's slightly different, but one of the ways you can do that is by participating in IDOs and IGOs. To do that, some people actually, like I do, we actually go through launchpads. CDFI is one of my favorites, and I also have Avalanche, which is on Avalanche. And Avalanche, I'm participating so far. I participated in all three of the latest launches for this cycle. CDFI, I'm selecting what I need to jump into. Some of them have been okay, others have been not so okay. So that is value investing, but not many people can afford that, because if you are late to get into a launchpad token or coin, that's it. You won't get a sizable or a decent enough amount to stake so that you get a bigger share of the allocation when new tokens are allocated to purchase. Of course, they won't be airdrop, they will be purchased. Okay, that is value investing. And other types of value investing will be participating in different activities for a project that does not have a coin yet. You participate in those by either using their products and so forth, or connected products, so that when the token actually launches, you may in the end actually get that so-called dividend in the form of an airdrop. That's just something, it's not financial advice. You do what works for you or what is suitable for your jurisdiction. The third investing strategy for me is momentum investing. Now, momentum investing is based on the premise that stocks or cryptos that have performed well in the past will continue to perform well in the future. This is why in crypto we say you need to double down on your winners. Instead of selling them to go into a weaker place, you want to double down on your winners. So that's momentum investing. So for example, one of the things I've actually been doing is, I know Injective is going down, but I'm piling into Injective. Why? Because of the momentum it has, and I think once things come back, the momentum will be there. Other momentum, for me anyway, my experience is it works in a bull market. Momentum is when something is going up crazy. In a bull market, you can jump on the train and it will go even crazier. In a bull market, that works. But in general, any investment that is going crazy, for me, I just stay away from it, because at some point, what goes up will come down. So you want to wait for decent retracement and then jump on it for this momentum investing strategy to work. A good example is Tesla's upward trends. That was during, I think it was during the last cycle, where Tesla just went crazy. And the outcome there was profitable returns during periods of strong positive price momentum. And those who followed momentum investing strategy with Tesla have seen significant returns. And I think we are seeing the same with Nvidia, momentum investing, that is. So people who missed the first part of Nvidia's rise, if they jumped on it when the price was, I think it was around $300 or $400, now it's over $1,000. So that's like you've more than doubled your money already. That's what you want to do. That's momentum investing. But again, you need to be careful. What goes up comes down. We always joke in crypto that when prices are going up, they use the stairwell or the staircases. But when they're coming down, they use the escalator. There's no way you're going to catch the drop. That's it. Oh, some people do, but not everyone is going to catch the drop. So that is momentum investing. Then we also have the fourth one. This is the most common one. It's called dollar cost averaging, or DCA. DCA involves investing a fixed dollar amount in a particular investment on a regular schedule, regardless of the asset's price. This is, okay. The strategy reduces the impact of volatility on the overall purchase and can lower the average cost per share over time. So the best way for me that I've seen with this one is, if you want to do that, you want to automate that exercise. For example, on Coinbase, you can actually connect your payment method or mode of payment and automate it to weekly investments or daily. It's up to you. But that's the best way, because if you leave it to your emotions, there comes a time when you say, it's too red, I don't want to go. Oh, it's too green, I'm missing out. No, then you FOMO in. So this one here, the dollar cost averaging, I think you want to automate it to remove the emotions out of it. So, I mean, an example would be, many investors that have used DCA to invest in Bitcoin. By investing a fixed amount regularly, they've managed to accumulate Bitcoin over time, mitigating the risks of buying all at once during a high price period. This strategy has proven effective, particularly given Bitcoin's significant long-term appreciation despite its volatility. So if someone has been buying Bitcoin and a DCA strategy since, say, 2017 to now, they are most likely going to be in huge profits, regardless of whether they bought the top of the last bull cycle. They will be in profit because they've been DCAing. And DCA allows you to lower your entry price, the average entry price. This is a strong winning strategy that is proven to work most of the time. And the final investing strategy that I'm going to highlight is index investing. This one here is for traditional stocks, mostly. In crypto, we don't have any index. If we do, I think with ETFs now, we may actually get to index investing in crypto. But the other, you may do so indirectly by investing, say, into Ethereum if you want to capture what's happening within the ecosystem. But at the moment, it's not all like that. Because you will have some layer 2s doing X, you got some meme coins doing Y, and then you've got some real dads doing nothing. So I don't think you'll be capturing everything. And Ethereum doesn't really capture all the value, that's all I'm saying, from its ecosystem. So you can't do that. But index investing involves purchasing a portfolio of stocks designed to match the performance of a financial market index. This strategy is based on the idea that it is is challenging to consistently outperform the market, so tracking the market can yield good returns with lower fees and risks. A good example is Vanguard's S&P 500 ETF, which uses index investing strategy. And the outcome there is steady returns matching the market performance with low fees. Many investors have seen steady returns by investing in the Vanguard S&P 500 ETF, which tracks the performance of the S&P 500 index. This fund is provided broad market exposure, low operating expenses, and a long-term growth track record. So guys, these are the strategies that I use on different things. Of course, I don't just use a strategy as a blunt tool. I select and apply things tactically, okay? I use tactics to apply my strategies. How about that? This strategy is backed by historical successes, provide diverse approaches to investing in both traditional financial markets and the emerging cryptocurrency market. Each strategy has its own unique advantages and can be tailored to meet individual investment goals and risk tolerance. Now, the question for you is, are you using any strategy at all? Because if you are not, you are planning to fail. You must have a plan. Use a strategy so that you know when to draw the line and say, okay, this is it, I'm not going any further. That requires a strategy. If you are not using a strategy, you are planning to fail within this space, the crypto market space. Anyway guys, that's it for this video on trying to share with you how I apply my top investing strategies within the crypto space. Now, I want to hear your own strategies. Let me know in the comment section. Until the next one, guys, I'm your host, FD from 65.TV, signing out for now. Bye.